Hey everybody, Kimosabi here, giving an update video now that we've got a move up. It's looking pretty good. What we want to see here on a weekly time frame, so that'll be tomorrow evening or Sunday evening, you want to see this candle closing higher than that candle close. You are at risk of putting in a lower low from that low, a little lower low, and maybe getting a lower high here until it closes above that. So you want to see it close above 104. If that closes above there, you would have a buy setup on this bullish engulfing candle at 98,500 area. So we should probably mark that off. That's a good order block right there. It swept the lows. So if this closes higher, that puts you in an uptrend and you buy the higher low. So that could be a great place for an opportunity. So we will mark that off. If I can get this to work. There we go. 98,400. The idea being for the order block that this is where the orders were placed, push price down, and you get it down again and then reversed. So if you were to have the market maker want to close out those orders, any remaining orders, he would come back down there and switch those sell orders to buy orders, canceling himself out, kind of bouncing his book. And that's just a common thing that happens. So we might see that early on in the week. If not, we still do have a potential for a buy setup down at 87. I still haven't given up on that idea. If we do close a higher high on the weekly, then that becomes less probable, but not impossible. And I mark that off just as an opportunity. If price does come down there, don't see it as price is breaking down. That's likely going to be an opportunity because it's a 0.5 fib retrace. And we'll go on to the daily to check that out. But you have the trend line from the 55K lows, 60K lows that would coincide with this downward sloping support, and it would line up there. So something to watch for, kind of what I'm watching for potentially the next daily cycle low or the mid-cycle low happening towards the end of the month. If price does come down there, I would see that as an opportunity. So here on the daily chart, you can see we've already got a higher high close. So that is great to have. After taking this liquidity, you may have the buy setup halfway up that wick that happened on Thursday. Thursday's wick down, maybe measure 50% of that wick. That could be your opportunity, at least for a bounce. If not, that could be a bottoming area. Also, this wick, the center of this wick, was not retested. We often see that we retest support. So price coming up did not come back down to test support. So that's another area of opportunity, potentially at 91 if price breaks below 98. So if price comes back down to 98, I'd look for an uptrend to start on a 15-minute or a 1 hour to see if we can get higher prices. If I get stopped out on that, then I would look to half of this wick that came off the lows. You got strong buyers down there that reversed price, and previous support would be where I would look at 91,200. That would be another area of opportunity, but you're kind of getting low. I'd really rather this stay in the upper areas here and not get below like 95,000 if it wants to stay bullish. If it does not want to stay bullish, then you do have an Elliott wave pattern that says that this price can come into play, and that is an ABCDE triangle. From there, you got A, B, C, D, E. Pretty symmetrical looking. It does have the trend lines would kind of coincide with that. So you have like an expanding structure here that just takes liquidity from both sides, maximum liquidity for the market maker. Takes liquidity up there, takes liquidity down, takes liquidity, takes liquidity, takes liquidity. So if it wants to repeat, maybe it comes back down here, takes liquidity and grinds this out for a bit into a cycle low or a mid-cycle low. And that would just be A, B, C down for a wave 4. That would come touch the trend line from the 55K lows, So that would be an area of opportunity sometime later on in the month if we get it. If we don't get it, we don't get it. So we got to deal with what we have in front of us. So if we do have a weekly candle close higher high, I'd look for the higher low somewhere around 98,000. Don't really want to see it get below 95. And that's because this is the halfway point of what the market maker is kind of doing here on this expanding structure. See, right in the midpoint, he just keeps going up and down. So if he gets below that area, you're kind of in the bearish area of where the market maker is playing his game, and you're likely to take out that liquidity. So want to stay above 95, 96, preferably above 98, but you might have a wick down and then a close back up, but no closures below that. If this does want to remain bullish, we could be setting up for a very bullish February if this pattern is what we're currently repeating up here, which is what I was kind of hoping for. And I'd lean more into that with a weekly candle close somewhere above 104, 104,000. If you close a weekly candle above that, then that puts that kind of more on the table. But you got to think about what we have coming up this week. Monday, we have bank holiday, Martin Luther King Jr. Day, and Donald Trump's inauguration, who is supposed to be the most bullish administration on crypto, and he's going to buy and pump our bags, making a Bitcoin reserve for the United States. Yeah, maybe. We'll see. All we can do is trade the charts in front of us and what they're doing. So if you do close the weekly candle higher high, I'd still expect some kind of weird pullback. It might look like that. Repeating that leg over there, which would bring you down to the buy setup, potentially break all-time high, and then flush down to stop anybody out. Because you got to think of what traders are doing. If you break all-time high on some Trump news, Trump inauguration news, they're going long up there. They're stopping out anybody who's short, and you have longs. Now the market maker has to take those orders and feed them down below before bringing it back up in a three-wave move back up. That gets people to sell again. Nice move down, and then up, repeating that leg. So this leg is kind of what I'm expecting to happen in February. If you close a weekly higher high, that would be the expectation, and the target for that is quite high. So it's very optimistic, but kind of what I'm hopeful for here. Like I was saying in my last video, grinding out this over here. Kind of doing the same type of pattern, wearing you down a little bit into February, where you have the February mid-cycle low into acceleration upward to repeat your early November move. So what is that, 2 months later, 3 months later? 3 months later, you get a very similar move. And as it stands right here on the daily, you have a high here. Currently have a higher high close there. Your last low was there. So currently the buy setup is right at 95, which would be right in the midpoint of here. Hopefully you get a daily candle close a little bit higher so that you could be up higher, and that brings you into the 97 to 98 range for the higher low. Well, that would be something to look for an uptrend to start out of there and mimic this pattern. Give you like an APC back up and then back down. So it might wear you out, but it might just be an opportunity to add again after taking profits. And the idea of like 3 months later getting an acceleration up, it's basically what this whole thing has been about. Let's throw it on the log scale so we can see it a little better. Oh, that looks so much better. So you basically have big acceleration up, chop, 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 big acceleration up, bunch of chop, big acceleration up, chop, 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 big acceleration up, and then a whole bunch of chop. So we're just mimicking what the pattern has done. So when this thing when it is ready to break out, it might be really quick, or it'll be another fake out. So you have to manage risk appropriately. But have a higher high close, and then you have the alignment happening with all of the trends with your weekly, daily 4 hour, 1 hour trend, once those get into alignment, you get these expansive moves like those. So we had the same thing happen here once everything was in alignment, which go back to the video on the alignment. I think I made it around the 80K area, and how to enter into a trending market as it's moving. It's called the alignment. So yeah, hopefully we get something like that out of here. I don't know if we still have to make that lower low just to take that 50% retrace. We mark that off here on the thing I was looking at was from that low to that high and linear scale. See, we've been basing on the 382 fib retrace, and I was expecting the 0.5 fib retrace to be hit. So we haven't hit it yet, and that's a common wave for retracement, so that's why I see that as an opportunity. Don't know if we're going to get it. This might have to suffice. It came close. The market may be too bullish, and it's just going to go up from here. And this is just an ABC that was truncated a little bit. So could be. We could be repeating these legs here, and February could be a very explosive time into March. The price could definitely just explode out of here right now. That is totally possible. I personally like to buy the uptrends, so I'm waiting for this uptrend to start to add more. I was trading the 4 hour uptrend up to here, but closed out half my position there. Waiting for an opportunity to buy the higher low, which I'm suspecting will come around 98,000. If it does end up stopping me out, it might come all the way down to 87. And it's just a market maker game here, just maximum liquidity. But I would see an opportunity at all of those areas stated, and unfortunately I might get stopped out quite a bit. This is definitely a take profit area for me because we broke that liquidity. And stop loss, if you're trying to sell this market, your stop loss needs to be at all-time high. I'd actually say Friday's high would be a stop loss. You probably get stopped out, but if you're breaking above that, you're still pushing up, and you're likely to go take that all-time high. It becomes increasingly likely, I should say. Unless you have a double top like this. The all-time high just gave you a little wick higher. You might be experiencing something very similar here, or just wicks higher, and then repeats some kind of choppy ABC expanded flat type of thing going on. But yeah, watch for games to be played all around Trump's inauguration. It is a time for the whales and the market makers to maximize their liquidity. You got a lot of people that are very bullish on the ideas. You got some people that are saying it's a sell the news event. So you're going to have positioning on both sides. Watch your stop losses, watch your trend. If your trend is telling you it's going in one direction, then trade that trend on whatever time frame you're trading, and keep your stops tight to have a good night.